All right. What's up? Happy 4th of July. About to head out here in a bit. It's been almost a month, 3.5 weeks since my last video. I'm like, I've got to do a video. Some of you know that follow me on Instagram. I've been traveling quite a bit. So spending some time in the US, which has been nice, just catching up with folks. So literally in the past week, it's been Orlando and then Atlanta and then Austin. And right now I'm in Vegas. And then I'll go to, actually, you can see the little Paris Eiffel Tower thing in the background. Then I'll go to LA. And then I'll be back in Austin. And but what I wanted to announce is that a couple of you have already made the deposits for PEFI 4. So we're planning on kind of open it around July 1st. Something that to kind of push that was I realized that with the current PEFIs, I was very much pushing a very high speed, and I get this stuff, I've been doing it for a little while. And so, for me, I'm like, okay, let's get this deal. Let's move to this one. Let's go, let's go, let's go. We had a call last week and, they were, putting together the LPs and GPs, and they were just like, okay, like, I don't really understand this. I don't understand this. And so I realized, all right, I need to slow down. We can slow things down a bit. Sorry, it's saying that my connection may not be the greatest in this building. But yeah, it's like, okay, so we can slow things down, take a little slower pace. For me, I think I like getting the deals and getting everything moving as quickly as possible so that like as soon as the fund is open, we have deals, they're already making money, the returns are already being generated. This is kind of a secret hack, is that if you can close a deal even before the actual fund is created, as soon as that fund is created, you're generating returns in that fund. One of the things that decreases the returns in your funds is that you're starting the fund and then you're going out and figuring out deals. And so it's literally putting the cart before the horse. But if you can put the cart before the horse, sometimes that is a good thing. But the great news for some of you that have been on the waiting list is that now that means that it gives me more time. Like if I'm going slower with each one and making sure that they have a very clear understanding, because this is it's as much a educational endeavor as it is, obviously we want the fund to work and to be successful. And it's just so different because the education is through experience. Be sure put in a comment. I didn't know if anybody would pop in, but cool to see a few of you. Put in a comment, just say hello. But the nice thing, and hit the like button so that other people can see this, because I'm so terrible about being, consistently doing the videos. I just get busy and, doing things. So YouTube doesn't like that. So that means a lot of people will not get the notification that I am live. So yeah, be sure to hit the like button so that increases the likelihood that some of the other people who just like you and want to see this stuff can actually see it. So wanted to make that quick announcement, but I also wanted to talk about this concept of when we're looking at deals, looking at things that are scarce assets. And this starts, happy 4th, Essie. I appreciate you jumping in, sir. So when we look at like the biggest assets that are on Earth, gold has been around forever, silver has been around forever, and the reason that those have maintained, I mean, like gold has been seen as something that's valuable for like 5,000 years, silver for 6,000 years. And you want to look at, okay, when I'm figuring out what assets I want to have, I want to have assets that are similar to the properties that make those assets valuable. So when it comes to gold, the only reason it's valuable is because of the scarcity. And it's a difficult thing to go and get. And so when you're giving it to somebody else, it's not that they can go and they can create it very easily. If your mode of transaction is something that can be created very easily, they can just go and create it themselves, and then they can go and buy everything. And so it passes down, obviously, to collectibles, and we've seen it with art. If there's only one Mona Lisa and you can prove that that's a Mona Lisa. And so it's not about that painting being so amazing. It's more about, I can prove that this is the Mona Lisa. This gives me a mode of transaction, a mode of transfer of something that is unique and scarce. You can't go out and create another one. Now we're seeing it with Bitcoin as well. This is this unique, scarce thing. So when we look at the dollar, and this is important for like Independence Day and you guys getting your financial independence, the dollar is something that's only been a fiat currency for 50 years. I don't think people really understand it. They think that it's been since the beginning of the US. But just so you know, and this is important, this is so important, like the average time that a fiat currency stays valuable before it goes to zero is about 27 years. And this isn't just little countries. The France franc, like that was a thing. Germany they had a currency and it basically went to zero. So the average fiat currency only lasts 27 years. When people are introducing a new currency like the euro, it's not just like, oh, like this is this cool new thing. Like it's out of necessity, because you literally have a currency that goes to zero, and then countries have created a whole new kind of labeling of a currency. And so this is important because I think that there's not a context. Like when you hear, oh, the dollar's being devalued and that kind of thing, a lot of times we don't put that into context, that before, whatever, 1970, there was a backing of gold to the dollar. Once that separated in 71, that became the first time that the US had a fiat currency. This is a very short-term experiment. This isn't something that's been around for a long time, and every other currency is going to zero. And the dollar has literally lost over 90% of its value. So, it's like, if you're looking to hold something, that's the opposite. That's the opposite of having something that's scarce. And so how do we put that into private equity? When it comes to private equity, what we're looking for is a scarce asset. We're looking for the business that has made it through that entrepreneur gauntlet. And this is the 5% of businesses that have been around. They've been making money for a couple of years. They actually made it to profitability. And now it's actually a sustainable business. 90% of businesses don't get even, to the probably about 80% don't even get to profitability. But building something that's sustainable and has systems and is a sellable asset is a very tiny portion. It's actually a very tiny portion of the businesses that are on the market. Most of the businesses on the market don't even meet those basic qualifications. And so when you're buying that asset, obviously that gives you the scarcity. But then the cool thing is, no matter what happens to the dollars that is inflating, your prices are going up. So you're on the other end of that. The consumer is losing with inflation because they got to go and spend more and more money, and they got to beg their boss to get an increase. The saver is really losing. If you're just putting money in the bank and not getting these scarce assets, then you are really in trouble. And so the ideal situation is having both. You want to be on the business side, where as the inflation increases, you just charge more and more money as as the money devalues. The other side of that is you having a scarce asset that is sellable, because there aren't many of those. You can't just go out and print a business that's profitable, that has systems, that has employees that are trained, just all of those things. You can't just create that out of thin air. So that's something that's a little bit of a different concept that I wanted to share with you guys. And I wanted to do something for Independence Day. It is the 4th. So we're opening up at least 4 deposits and applications. It'll be a while before we actually get started, but the spots tend to go quickly. We've had a lot of interest in each one. So you will want to get your deposit in, start the interview process as quickly as possible if you are interested. And very much looking forward now that I'm realizing, like, okay, you know what? We've got 2 years together. We can take it easy. I think we'll be able to do more of the iterances and just go deeper and slower. As Essie knows, I mean, he's in PEFI 2. It's like, we're just now getting all the agreements, all that stuff. We've already got 2 deals. So it's like when I'm going, I'm like, hey, let's get these deals done. Let's start making money right now. Let's grow. So as soon as the paperwork on the fund is done, we're in the money. We're just like transferring the money that's already been made, transferring the deals, and we've got returns that's being generated day one. But I move at a pretty high pace, and I tend to move at a very high pace. All right, I'll read a couple comments, and then we'll get to the. This is my first time doing Vegas, a 4th of July in Vegas. So one of my best friends just moved here. Got to see him. We've been friends since 6 years old, which is nuts. Like 35 years of friendship, which is really cool. So about to head into some festivities. Then a couple of clients, couple PEFI members are going to come in tomorrow. So excited to hang out with them in Vegas as well. All right, we'll read some comments. If you've got some questions, we'll do that, and then we'll bounce out of here, folks. Darius says, I was just thinking about you this morning. Manifestation, baby. It's real. It's real. I have seen it a lot in my life. Dr. Crypto, what's up? Was just giving a shout out to Bitcoin as having the scarcity side. The biggest downside now with DeFi, there are a lot of ways to generate income, but that's what you want. You really want both. You want the scarcity on one side, and then you want a way to generate income with that scarce asset. So Dr. Crypto asks, when is the next PEFI starting? Right now. So we're accepting deposits. We've already got a couple deposits in. Shout out to those guys, Derek and Derek sent his in, and then we have one other person that it's slipping my mind. My apologies. So we've got 2 folks that have done it, and we'll just go through the application process, and as everything comes together, we'll get that rolling. It's very exciting to see just like some of the possibilities as we have more of these, and you're able to do deals together and partner on deals and buy deals from each other when one is closed. And there's some really cool things as we build out this ecosystem. And then who do you contact? Great question, Dr. Crypto. Nori at financierbank.com, and bank is with a C. You can send me an email, CC me at acechapman.com. I get a lot of emails. Unfortunately, I'm on a lot of lists from just brokers, and so I'm just going through, and it can get caught in just the minute I get a lot of each. Actually, I get a bunch of private equity funds that are trying to buy smaller deals now that are emailing, but send it to Nori at financier, BANC.com, and CC me, ace at acechapman.com, and she'll make sure that I get it. Essie says, good pace, keep stretching my comfort zone. No stagnation, baby, no stagnation. We're keeping it rolling. Also, this is a great question, Essie. So also interested to know why it's no longer a prerequisite to do DMI before PEFI. So it is a preferential treatment, essentially. So they get preference. So, in PEFI 3, three of the folks were in DMI, and so they got preference over some other folks, which is why we're kind of rolling into this. And what I've realized over the course of this is just totally different. The PEFI, and we're moving into training in DMI some of these concepts, but buying a business, you don't want to buy a business as a business buyer the way that we would do a deal in PEFI. What you would focus on, if you're, most of the people that are coming into DMI, they are just looking to buy a business to replace their income. They're in corporate America, or they're in a job they don't like, or they lost their job. And so they're looking, that's kind of that first level of just, hey, I want to replace my income and get out of a job. And when you're doing that kind of deal, you don't want to do it like you would a private equity fund. With a private equity fund, you're willing to just take on a bunch of leverage, a bunch of debt. You don't want to structure a deal because you need to make sure the cash flow is going to be there. For us, we're trying to increase asset value over the course of 2 years because we're going to exit out of it. And for them, the asset value doesn't matter as much because they're just looking to live off the income. So as you already know, like some of the moves that we're making in business is strictly because it increases the multiple or the value of that business at the end. And so, there's just a lot of things, but what I realize is that this is just a totally different thing. So either way, whether you've been through DMI, because you have worked with us, then we still will give preference. But no matter what, we're starting with something totally new. And in some cases, if you're stuck thinking like a business buyer, that's going to be to your detriment. And if you're running a private equity fund, as like a lot of what I spend time doing is, even if you're an entrepreneur, in PEFI 2, we've got a couple entrepreneurs. It's like, yeah, you can't think like that. Like, I realize that makes sense in the entrepreneur. And we just had that long discussion a couple weeks back. Like, like what you're saying, that strategy makes total sense. But here's, I think I listed like 4 or 5 different reasons why inside of a fund, that same thing that makes 100% sense from the perspective of an entrepreneur makes 0 sense. There's just all the reasons in the world you would never want to do that in a deal in a fund. All right, Dr. Crypto, this is a great question to end on. Can you give us a quick summary on what PEFI is? So PEFI came about because, I'd been buying business for about 12 years. This was 8 years ago. Had an investor I'd done a lot of deals with come to me. And at that point, I would just go out, raise money for a deal. I would, grow the deal and then exit it and sell. And he's like, man, you need to start a private equity fund. I'm like, I don't know what that is. It sounds complicated. I don't really care. Like, I'm making good money. Like, I just want to keep doing this. And I was fortunate that he just made it really easy. He's like, listen, I'll help. I'll put it together. I'll be one of the GPs with you. And I think we should at least just try this. And we did. And it was probably a 6-year process, just like understanding this new animal, because I did approach it originally as a business buyer. And so I had to learn the hard way that this is a totally different animal. And for me, the big realization was, we talk about, when it comes to buying a business, we want to leverage the work that somebody else has done to find the right niche, figure out the marketing, hire, train, build customer service, all these different things that it takes to build a business. Well, a lot of what a fund is that in life, we're taught that you have to save up money for 40 years, and then you've got this money, and then you just switch to becoming an investor, and you're managing your money and you're living off of that money and the returns from that money. There are a couple downsides to that. The most obvious one is that it takes 40 years. The second one is that you haven't learned anything about managing money or investing. And so you've been in this profession, you've made this money, and that's what happens to a lot of people that, turn their money over to a Madoff or whoever. They don't know anything. They just have made a lot of money in their thing. The thing that I love about a fund is that it switches that. So instead of you trying to save up, it's like, okay, I'm just going to start that now. If that's the end goal, is that one day I have to learn and figure out how to be a good investor and run money and get great returns. Why don't I get that now? And now, instead of my work being, I'm going to work in some business or be an entrepreneur and have those ups and downs and the stress, and I'm going to do that for 20 years. No, I'm just going to raise the capital that I need instead of me working for the capital. And then I'm going to take a percentage of those returns instead of me, working for 40 years and then I get all the returns. Like now I can give the investors some return, and I'm getting a return. And most importantly, I'm learning the most important skill set, which is running a portfolio and getting returns off of that. And that is the business of private equity. It just so happens that we really focus on what I think is the best asset class for getting really great returns, because there is that scarcity and a lack of competition. I was having a Twitter conversation where somebody had tagged me saying, like you almost have to follow somebody like Ace, because now in real estate, when you're in a area, like you're not just competing with more investors than ever before. Now these mega funds, Blackstone, like these institutions have access to hundreds of billions of dollars, and they're pumping a lot of that money into suburbia. And what happens to the returns is that they're happy to get a 8% return, a 5% return, because they got 100 billion and they're taking 2 off the top. So with a fund, with these funds, they're coming into our spaces. And so if you're not in the fund game, you're going to have to compete with them. And if you're coming in after focusing on being an entrepreneur for 20 years, and now you've got to compete against these guys that have been just focused on investing, just getting access to capital and investing it, they're going to end up with your money. All right. I'm gonna do better about getting back on. I love whenever I get to chat with y'all. Again, look forward to some of the talent that I know is going to come into PEVI 4. You can hit up Nori at Financier Bank with a C, not a K.com. CC me, Ace at Ace Chapman, and we'll let you know the next steps and what that's gonna look like. Thanks so much.